Good morning. Yeah, so if you can hear me, definitely let me know in the chat. All right, if y'all could hear me, let me know in the chat so then we can fully get started. Can you hear me now? Okay, perfect. Appreciate you, Joe. Appreciate it. See, if you guys get to me quickly, confirming like you just did, we get started much faster because I don't want to, go through a whole thing and not be heard. So, but yeah, how was your weekend, Joe? Hope you had a very peaceful weekend. Appreciate you hopping on. Right. It's very interesting how we have seen DXY aggressively reach for sell side. That was just like a really quick, fast-paced move. So because it was so bearish, and this has happened so quickly, like there's been like no breath, right? It hasn't given any type of time to respond. Haven't really had any type of reaction in the indices. This large move makes me feel like they're going to definitely want to punch back up into these people. Right, but we have taken buy stops, so we'll see what happens once that occurs. So price is taken buy side. Price is now taking sell side. So we don't want to see price return back to the midpoint if this is going to fall. If it does do that, that'll kind of be in line with our bonds and yields, right? So yeah, we're going to get started. Before we get on the DXY and the indices, first thing as always, we got to check what is ahead of us in terms of the news, right? So again, like I've said before, I'm going to keep mentioning on every call till it sticks to you guys, is when you're looking for a particular move to occur on these higher time frame charts for the DXY and the indices, you always want to look at the economic calendar, because just like how macros and time is important on the lower time frames for positioning and trying to gauge when a move is going to take place and stuff like that, the economic calendar is basically showing you when you can reasonably anticipate institutional sponsorship coming alive for a particular move on the higher time frame at a specific level of liquidity, whether that's at the a fair value gap, order block, running above a high, so on and so forth. A lot of times, like I said, the news is basically giving you a schedule in terms of when things should ideally take off from a particular level, or take off to attack a particular level. So that's one of those things that goes over a lot of people's heads when you're using the economic calendar. It's a tool. It's not just like showing you when news is going to happen just because. It's literally when smart money is going to be positioning potentially, or when there's just sponsorship behind a move, right? So so we don't really have much going on here for today. We've already had the news come out for, I guess it was a FOMC related situation, comments or whatever. So that's obviously why the DXY took a nosedive over London session, right? So the reaction that we see in the DXY in terms of it attacking sell side or dropping down to this fair value gap was basically instigated, right, by the FOMC announcement here. So just going back to what I said a second ago, you use the economic calendar not only to schedule events, but you use it as like a macro, right? Just as we use the lower time frame and the time elements from the lower time frame to try to get in front of things and time things properly. Again, the economic calendar plays a similar role just for the higher time frame, right? So that's important for potentially timing a draw on liquidity, timing when price is going to reasonably attack a particular level, like a PD array. And it just, it helps you get in front of the times when things are actually going to move, similarly to how we use the macros. And then, of course, as you drop lower, there's other time elements that you can get in line with on top of this topic I'm talking about with the economic calendar, right? So yeah, let's just backtrack a little bit. So as always, right, we always start at the economic calendar because of the statement I just mentioned to you guys. And then the next thing you do to start gaining clarity in terms of support for a particular direction throughout the week in the indices and the DXY, the next step is obviously going to the bonds and yields. And again, for those of you that don't know, or for those of you that just need a refresher, bonds and yields are basically what dictate a lot of the price action we see, what particular levels are going to be hit and why. So the bonds and yields have a heavy impact on that particular situation, right, in terms of bias, right, and clarity, because clarity is what we're aiming for, right? Every time you hop on this call or any of my lives or watch any of the videos, you got to remember the focus is clarity, 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 because then eventually you'll figure out how to become profitable with a model and different things. But if you don't have clarity and trust, or know how to build clarity and trust in a particular direction, you're going to get chopped around. You're going to get, ragdolled, and it's just a little bit more difficult than it needs to be, right? So clarity is what most people lack. So remember, every time you get on these calls, the whole process that I share, everything that I look at, everything I tell you guys to look at, and all the things that I say are important, they literally have that in mind. How am I going to transfer the ability to have clarity to the people that lend me their ear? So yeah, and I appreciate you guys hopping on. So what we see here after we looked at the economic calendar, right? We have not really much for today. We have a couple things for tomorrow, and then throughout the week we have a couple of things as well. 5:30 is when we obviously want to be on the chart, which is why I always go live before 5 or right at 5:30, because we got to set up, get a lay of the land, see what's going on, do this type of analysis versus just flying out of bed, not even brushing your teeth, and then going in trying to get an entry on the NASDAQ, right? Like, that's just a recipe for disaster, right? But yeah, so 6 o'clock, 7 o'clock Pacific Standard Time for Tuesday, 7 o'clock for Wednesday, right? 5:30, 7, so on and so forth. These are going to be the times that you want to be on the chart doing this exact process, mapping out, what price could do and when, right? And this is the when, and now we're on the what, right? What is it going to do and why? So the bonds and yields, like I said, have a heavy impact on what occurs, what narrative can be trusted, and whether specific things should or should not happen. And then if these markets are consolidating and you see the DXY and the NASDAQ or the other indices are acting a little bit suspect, like if they're chopping around, consolidating, or just not really moving, just taking stops and are range bound, a lot of times it's because something's happening in the bonds and yields, or something's not happening in the bonds and yields, and it's consolidating, right? So that, along with your observation in terms of like a lack of symmetry, that means basically the market in a particular asset is not following the relationships it's supposed to, right? If price is bouncing around between new week opening gaps, right, that are close to each other, that's also something that helps you identify that we're in a consolidation, which means you'd have to be very cautious, lower your risk, and limit yourself, right, until clarity comes, unless you have a model that can trade within a consolidation, which there are ways to do that. I touch on that from time to time as well. But yeah, in terms of what we see here, prices, it's been range bound, right? You see this high on this candle, you see the low on this candle, and you see the last couple of days have been basically inside that particular range in price action. So that makes things a little bit more difficult to trend. It kind of stops things from having a exaggerated trending environment. You also couple the fact that we're in summer months, right? A lot of times the summer is a little bit more difficult. So it's not ironic that we see the bonds and yields not really doing much going into the summer, because a lot of times you guys have probably heard ICT say that the summer months are kind of rough, right? He's mentioned it a lot of times. But now, instead of you hearing that and just assuming, oh, okay, it's just going to be consolidating or kind of difficult just because it's the summer, now you have more underlying factors, right? Not only seasonality, which is, part of why ICT says things are a little bit harder in the summer, but now you also have an intermarket relationship identification process that you can look at and lean on to make more sense of it, besides just taking his word for it. It's, you look at the bonds and yields, whenever they're consolidating throughout the year, that's going to generally cause an issue in terms of trending, right? And whether price is going to be able to trend or not in both the DXY and the indices. Now, if the DXY is consolidating and the indices are trending, it's kind of difficult to use that intermarket relationship, correct? Because we got to use the DXY to generally assist us in verifying or building clarity. Well, if the DXY is not showing us clarity, you can simply go to the bonds and yields and use those as if you would be using the DXY if the DXY is not being helpful, right? To assist you in further layering your trust and clarity in a particular direction on the indices, right? So just a little tip. I've been sharing that the last couple of weeks, so I hope you guys, if you didn't catch it before, hope you caught that now. But yeah, so we've looked at the news, figured out what's occurring this week. We have a lot of good things that could potentially occur. We have now the bonds and yields. Looks like they're just kind of stuck in the range I mentioned a second ago, right? So we're also inside this order block, right? We have relative equal lows down below. Price has been bearish. If we move up to the weekly, let's see if there's a even more clear picture. So we have this wick, we have this inversion fair value gap. Okay, so that's a good observation to keep tabs on. We have this order block here, right? We see that it's kind of closed below that midpoint. So it'll be interesting to try to see what's going to occur if this is just going to retrace and then continue going in the direction aiming for sell side. Right, so we'll see what occurs. We have validation areas in terms of being able to trust price staying to the sell side for the yields here. If we see this inversion fair value gap continue to hold price below, right, and not break out of it. Let me change the color so you know. Purple is generally weekly, blue is generally daily, and the bright hot pink looking color is generally monthly, right? Just so you guys understand the color schemes that I got going on, because I don't want you guys getting lost. But yeah, so we have the fair value gap here I just mentioned. We have also this large wick here. Because this wick jumped really low and came all the way back off, if price, we don't want to see price basically come to the midpoint of that, because this should act as a balanced price range. Because it's already offered sell side and then it offered buy side in that same vein and then aggressively sold off. So if we're going to stay going bearish, we definitely want to see the midpoint of this wick respected and see this area act as a potential balanced price range, right? So that's, and then of course, like I said, the fair value gap here should also be respected. Just remove the monthly, we don't need to have that up. We could just work with the weekly here. Yeah, so far, does this stuff make sense to you guys? You guys have anything that didn't make sense in terms of what we've just discussed, from the economic calendar to now to the relationships between the bonds and yields, and then obviously what we're looking for inside the yields, at least for now. Want to make sure you guys, if you have any questions, we can knock those out real quick. So just let me know in the chat. So I'm going to assume that things are clear. If you do have any questions as we move along, let me know. So yeah, we have the inversion fair value gap. We have this midpoint of the wick. This range should act as a potential balanced price range. So we don't want to see price get above that wick. And we want to see it continue to stay inside this fair value gap here and then continue potentially marching down lower. And then if we go to the daily, if that's the case, then obviously we'll potentially see the bonds end up doing a similar thing, but to the opposing direction, attacking the 2-day fair value gap and these equal highs that we've been mentioning throughout the last couple of weeks, pretty much, right? So it looks like we're consolidating, so it seems like it's loading up for a potential run higher. Now again, just like last week, what invalidates the bullishness here continuing, right? What's going to disregard that or give us insights that price may want to turn around, which would obviously have an impact on the overall bias across the board for the indices and the DXY. What stops that is if this swing low breaks, that's 1 PD array. If this fair value gap breaks, that's 2. And then the midpoint of this order block here, which is this blue line, that'd be 3 PD arrays. So that would have us considering the fact that price may not want to reach up higher, and then things may shift, especially if we see price in the yields rally. Okay, so remember, whatever the yields do is generally what the DXY follows. And whatever the T-notes or T-bond futures do, that's generally going to move in tandem with what the indices are doing. Anything opposed to the DXY generally are dictated also in lockstep with the T-bonds or T-note futures. So if we have this, the yields going higher, that should lead us to bullish DXY. And then to confirm that, we would have to see the T-notes fall. And then vice versa, if this stays down below this fair value gap in that midpoint of that wick, like I just mentioned, and it continues to fall, we should then reasonably see the bonds rally, and then that should lead us to bearish DXY, and then continued bullish indices. And then our whole narrative would be trying to justify that relationship inside the indices as well as the DXY, right? So with that being said, do you guys have any questions about that? Mind you, I mention this pretty much every single call, every live stream, because it's that important. Do you still trade if bonds... I got this little emoji in my way. Do you still trade bonds if DXY is consolidated? So like I mentioned earlier, if we have... So I don't trade the bonds, right? I don't trade them. I just use them as a gauge. I mean, you could trade them. They're assets too, right? And they're pretty lucrative as well. But if when I'm trading the indices. But if the bonds, if the DXY is consolidated, I pretty much verify what the indices are doing. Pretty much using the bonds and yields if the DXY is consolidating. But that's only if I can see that the indices are in a position to rally, right, or decline, right, in a trending capacity. If everything is consolidating and then I see, the bonds and yields are pretty much trending themselves, or DXY is trending, or DXY is consolidating and the indices are consolidating, but the bonds and yields are moving, that means that we need to wait until things get in alignment. And it really depends. Like, that's my perspective in terms of engagement. I mean, you can end up trading however you would like if you find something that you trust within those relationships, right? But generally, like a basic overview of things, if things are not really moving in the DXY, I verify for the indices with the bonds and yields. But again, it kind of just depends on what the circumstances look like, and the more everything is in alignment, the better. You know what I mean? So ideally, if we have bearish DXY and see potentially bullish indices, we want to see bearish yields and bullish bonds, or vice versa. If we want to see bearish indices and bullish DXY, we'd like to see bullish yields and bearish bonds / T-notes. Does that make sense? I hope that makes sense, right? So yeah, and if the DXY is not being helpful, you use the bonds and yields to verify as if you were using the DXY if you're trading the indices like I do, right? And if everything's out of symmetry, like everything's all hectic and doing whatever the hell it wants to do, and then things are consolidating and you just can't get a read in terms of alignment, then obviously, it's probably best to wait, because that then leads you to start marking off things as low probability conditions. And if you don't have a lot of experience navigating low probability conditions, if your process isn't very consistent and you're still working towards that, it's best to sit and wait for things to get more in alignment to a point where it makes sense to you, right? Because if you're in there and it doesn't make sense to you, how are you going to build clarity? Remember, that's the key element, is clarity, because then you're able to trust things and start working towards trusting things as a trader when you're engaging in the marketplace, and you're not so anxious, and obviously, experience applying these things is heavily impactful versus just knowing the theory. The theory is great, right? Everything that we're painting is theory, but as we march through live price action, those are the things that you also want to do on your own, right? Along with observing me if it helps you, so that eventually you can start trusting it. And I hope that seeing me navigate it and do the same thing over and over and over, proving that it's very helpful and builds clarity. I hope that gives you the ability to trust it as well eventually, in your own trading, right? And you got to make a process, right? And in my private community, I share 11 different processes that create a trading plan, and this is part of that, right? Developing the conditions, understanding what's happening, whether we're in high probability or low probability, the rules of engagement given a particular condition or multiple different conditions, from intermarket relationships to bias, validation, invalidation, so on and so forth, navigating different weeks, different news events, holidays, so on and so forth. There's a process for everything, including risk management and just a ton of different things, right? And this is part of the clarity building aspect for bias, weekly prep, just preparation, right? So yeah, I hope that makes sense, Joe. But yeah, so again, I want to observe and see whether we are going to run higher on the bonds and then continue to be pressed lower for the yields, because I can reasonably see us respecting this order block here, because if we go to the 3-day, it's a pretty clear order block, right? So, and we've pressed into it. Looks like we've failed to get above this high. I'd like to see us stay below this wick. Again, I'd like to see us also stay within this fair value gap. Remember the weekly wick I pointed out, the midpoint of that, right? Should act as a balanced price range, this little range here. So as price is pushing higher, we shouldn't see it aggressively smash through, because not only do we have the inversion fair value gap on the weekly, we have this midpoint of this wick here that should act as a balanced price range. We also now, when we drop down to time frames below that, we now have an order block and a midpoint of the order block that's also added to the list of potential validation points and an invalidation. And then obviously, as we drop down even further, we then have a fair value gap here as well. We have a swing high here. So yeah, the last line of defense is this weekly wick midpoint, because I'd be reasonable if you do measure out from high to low. You can see that there's a premium right above or right below that wick, which would lead us above buy side here into the fair value gap. And then obviously we'd like to see something press lower. Hopefully we could just stay below that and stay inside this weekly fair value gap inversion and the order block here, and then continue to press lower. Right, and there's no SMT. We don't see any SMT here. Similar between all three, the 5, 10, and 30-year bonds. Right, so it's a similar scenario. They've all also left, if you notice, they've left these lows here below a fair value gap, which makes me believe even further that we have a lot of things to trust in terms of price getting down below the sell side. And then obviously, to confirm that even further, we'd like to see the opposing view supported in the bonds. Okay, so I'm looking for things to potentially end up going lower and the yields higher in the bonds, aiming for this 2-day fair value gap and the equal highs here as a draw on liquidity for the week. We are consolidating, so we got to see, or we got to be patient to allow things to give us insights as far as when that should occur. And again, like I said, when can that occur? We could reasonably look at the economic calendar, and maybe that'll give us a nice scheduling aspect of things in terms of when that narrative could come to fruition, right? So it may not really move today. It's Monday. It's probably Mondays are generally not the best days to trade, especially when there's no news events. So I mean, that's obviously something you got to take into account for conditional awareness. But yeah, that's my overall view of things. I hope it wasn't too confusing. And obviously, given the fact that I think the yields are going to go lower, the bonds are going to go higher once we can prove that we can get out of this consolidation, which obviously must take, it might take a news event to get us out of it. But considering that that's the case, when we go over to, say, the DXY, right? When we move over to the DXY, that means that we may see the DXY press lower into here, right? And then possibly break through the fair value gap. This has been labeled as a potential market maker buy model. So that could potentially still play out. It has played out all throughout the last couple of weeks. But now we're at a premium. The bonds and yields look like they are going against that. So there's a crack in correlation there. But now it looks like we may see things start to move in that direction. We have the currencies here, because obviously the currencies play a role as well. We have the currencies looking like there's an SMT at the lows, right? We do have a fair value gap here, which could potentially lead us to see continued bearishness if DXY was to continue to run from this fair value gap, which again, we'd like to see the bonds and yields promote that. Right now, at this moment, they're not, right? So we'd have to see the yields rally and then the bonds drop to see price go higher from this fair value gap to make it trustworthy. And then that in turn would send this fair value gap, or it would send price from this fair value gap. If it hits it and responds lower, it would send price lower if that's the case, right? Given the S&T here, I mean, that's pretty interesting. We'll see if that's going to hold any heavy significance. So we'll see. That's something to note, obviously, for conditional awareness. Again, it's Monday. In the weekly range, if you guys have spent any time with me or any time with ICT concepts, generally the weekly range starts off with Sunday and Monday creating consolidation and manipulation for Power 3 on the weekly. Then obviously Tuesday, Wednesday sets the higher low of the week plus expansion if we are going to have a trending week. And then obviously Thursday and Friday, if we hit a higher time frame PD array on one of those days after price has been one-sided or takes liquidity on the higher time frame, generally that will lead us to either TGIF or price just fizzling out, not really doing much, right? So we got to keep that stuff in mind as always, right? It's a repeatable process. It's continuously looking for the similar things. So yeah, we're going to keep that in mind. Again, we have this SMT here, right? We see that it could play a role. Let's see, is there... yes, so... Then we got this previous week's high, right? So if this fair value gap breaks, if we go to the 2-day, we could see this is an order block here. We have this swing high here. If it breaks above that, we have an order block now that it could transpire into. We have relative equal highs with this and this. So again, if sells get invalidated, then obviously we understand how to make adjustments, right? The 3 PD arrays, if this is going to continue bearish and DXY is going to continue going higher, we'd have to see this fair value gap hold, and then we'd have to see this fair value gap hold, right? And then push price higher, and then see obviously this go lower. But if that does not happen, right, we're gonna try to assume that price is going to fall in line with the yields and the bonds, right? So if bullish DXY is going to actually come to fruition, we'd have to see this rally, and then this would have to decline and show no respect for these bullish or these upper PD arrays, and then vice versa with these with the bonds lower PD arrays, right? But for now, because none of that has occurred, we got to observe what's going to occur here, right? Because we've been kind of range bound inside that previous range of the week. So we want to see what's going to happen here. I'm assuming, again, until proven wrong and until things are invalidated with our 3 PD array rule, that the yields should end up dropping lower, and then these bonds should end up going higher. That should translate to this fair value gap not holding, right? This order block not holding, right? And then potentially aiming for lower prices. We still, again, from the last couple of weeks, I mentioned that this is a possible market maker buy model, right? For me to feel confident that that's going to fully continue and finish and reach for these equal highs, because those are obvious, I want to see the yields and the bonds start to promote that, because they're not right now. So there's a crack in correlation. So that means it's higher risk in terms of what's occurring, at least for me and how I view things, because I like things being symmetrical. And if they're not symmetrical, obviously it's a little bit harder to trust and it's higher risk. So you lower your risk, lower your frequency. And I mean, if you spend time here, right, and you listen to what I have to say and how I operate on a daily basis, you're not taking more than 2 trades a day, ever. And if you take a loss, you're dropping your risk by half, because that's how you need to operate, you know? And some people may think, oh, it's not enough action. It's not enough action. I can't get rich. Okay, well, you're going to blow your account, because you're going to be like 99% of people, over trading, over leveraging, trying to hurry up and be a millionaire. And I mean, go ask some of those people how it's going, because it's not going very well. And most of those people won't do what I'm doing here. They won't also do, you know, what other high-level ICT traders are doing, and be live and comfortable, because they know they're going to overtrade. They know they're going to over-leverage, right? And it's just, you know, it's very difficult to be in the public eye when you have those things happening, because you're basically faking it to the world. And that can only be hidden for so long. And that's stressful, right? They add more stress and lead people down a bad path. And it's, you know, and it becomes harder than it needs to be. This should be a fun thing. This should be something that you have logical decisions being made, not desperation, overtrading, you know, trying to do too much. Because, you know, Warren Buffett ain't taking 50 trades a day, okay? I mean, look at him. He only makes anywhere from 17 to 22% on a good year. Those are his numbers. We're over here trying to smash out 10, 20, 30% a week. Sometimes, you know, in a day, right? Some people's expectations are like that. And obviously it's insane. Like 22% a month is somewhat possible if you're taking, you know, maybe 1% per day. But that's not realistic, especially for a new trader. Now, if you're seasoned, like I posted on my Instagram, that's absolutely doable, right? But of course that takes time. Just like an army soldier, right? It takes time for you to become high-level general status, right? Well, it's the same thing in this battlefield as well, except we're not taking bullets. We're taking mental bullets, right? But, you know, you learn to manage those if you do things responsibly, you know, and it becomes a whole lot more fun and a lot more manageable, you know? So yeah, aside from the little rant there, again, I think it's going to go lower potentially. This may go higher potentially. That's my assumption until I'm proven incorrect. DXY is now reaching lower. We got to observe and see what's going to happen inside this fair value gap. London has been very bearish for the DXY, so that's a bit suspect. We do have these equal lows down here, right? That's a previous week's low. So that's definitely something to consider, because this may, in fact, if bullishness proves to not be the case, and we see the yields go higher and the bonds go lower, or if we see the yields go lower and the bonds go higher, right? If we see that occur, we're probably going to reach down below and then attack the sell side here. And then the market maker buy model I just mentioned, it won't complete, right? So this would then, if that's the case, if that does turn out to be the case, we have a consolidation here. We have a first stage accumulation, second stage accumulation, which should present a retracement, especially because London was so bearish. So that should give us a possible retracement. Maybe it goes deep. Maybe, you know, it stays within that little range of accumulation. But then once it breaks down and gets down below here, if it does do that, we could reasonably anticipate, if the yields continue to go lower as well and the bonds prove to go higher, as we've mentioned, then this would be the draw on liquidity potentially for today. If it doesn't reach it today, it would, you know, and everything's in alignment with that narrative, it would likely reach it by Tuesday, right? Because there's also news events, right? So the previous week's low could have sponsorship to get down below there in a market maker sell model capacity based on the news if it doesn't occur today after the New York Open. Okay, and it's pretty funny how the second stage accumulation, or the first stage accumulation, which would end up being the second stage distribution, is in alignment with this daily fair value gap we pointed out as well. So again, if we break down below that, we have this daily fair value gap inside of the potential distribution area or previous accumulation area that could act as resistance and reason for us to try to seek the previous week's low, right? So again, we got to just observe what's happening. We're not in a rush, right? We're mapping out things, prepping, plotting, scheming, strategizing, trying to figure out what's going to bring us, the key word, clarity for a particular direction, right? So I hope that everything that we've talked about so far is crystal clear, because a lot of, everything we've talked about is, it all plays a role, a heavy role in you building that magic word, clarity. And then obviously that leads to easier engagements in targeting and selection for particular models inside that narrative, right? So yeah, if the bonds go higher, the yields go lower. If they continue doing this and respect the levels I pointed to, this fair value gap, this order block, and then it can't get back to the wick midpoint, because that'll act as a potential balanced price range, right? Again, this wick. Why should it act as a potential balanced price range? Because we've already wicked lower and then delivered higher again. So both sides have been offered there. And now this return back is just basically retrading to it to then position again to possibly continue to go lower inside that potential narrative to reach down below these equal lows, right? And then again, supporting that idea would see this order block and these levels I pointed out here in the bonds, we'd see that get respected to go higher and reach for the 2-day fair value gap above equal highs. And it just makes sense, right? Hopefully it just makes sense to you guys, right? Yeah, I would like to see DXY go higher too, but again, we want to see the bonds and yields confirming, because if they don't confirm, that's when you can get into trouble and then start getting, some losses and then start thinking you don't know what you're doing, when in reality there's just specific things that are not in alignment that could have assisted you in realizing that there may be a chance that it's not going to go higher for the DXY. That being the bonds and yields, right? And as you spend time with me and as you go and apply these things in your own charts, in your own engagements, you'll start to see just how important it is to follow the bonds and yields and how impactful they are in terms of trusting a particular direction, trusting a bias, or not trusting a particular direction or bias or PD array when we trade next to them, right? So again, we want to observe how this is going to respond, if this is going to go higher in the bonds, if this is going to go lower in the yields, and then we'll see if that translates to the DXY potentially looking to reach down for sell side, and then that in turn would give us justification for the indices to continue to rally and stay in line with what's been happening already, right? So now we got trendline liquidity. We have equal highs here as well, so it seems pretty suspect to the buy side, right? So we got some we got we got Friday's high here, right? We got Friday's high. We got Friday's low. And this is, I think, it's a daily fair value gap. I don't know why it's red. Change that real quick. All right, so yeah, with all that stuff that I have mentioned, right, we're potentially reasonably, based on intermarket relationships, looking for DXY to fall and then this to continue to rally for the indices. All right. So what would invalidate that? Again, we have a 3 PD array rule. we have the intermarket relationships with the bonds and yields, because those dictate what is going to happen generally in price action and why things don't happen. So if we have this fair value gap get broken through and close below, we have the midpoint of this wick broken and closed below, and then we have the lower portion of this low get broken down below. That's 3 PD arrays, and then we could be potentially in line with a shift in sentiment overall, if it gets down there. And then that in turn would make us see, we'd have to see, to confirm that and be able to trust that, we'd have to see bullish DXY. And then obviously the bonds and yields would have to confirm that as well. But if they don't, we stick to what we're looking at. We stick to the areas, because that's when things change. Otherwise, like I've mentioned multiple times in the last couple of weeks, pretty much every live stream, higher time frame bias doesn't change on a day-to-day basis. Overall higher time frame structure, whether we're bullish or bearish, it only changes when particular things occur. Part of that has to do with obviously a change in delivery of the bonds and yields, but also 3 PD array rule, and just different things not being respected, right? If bullish PD arrays were respected, but then now they stop getting respected and it starts seeking sell side, and then everything starts to confirm that, then obviously things change if 3 PD arrays are taken. The easiest way to gauge whether something has changed is obviously using the 3 PD array rule. Like, that's the most simple way that I identify it for people that are learning. And then all the more advanced things you start adding on as time goes by, like intermarket relationships and navigating those as well, because higher time frame takes time to study because it doesn't deliver everything so quickly. And then navigating from the higher time frame to the lower time frame also takes time as well. But a lot of times you got to just know the theory, and then you got to gain the experience after you understand the theory, right? And I kind of try to put the theory out there, then in the market on a weekly basis, I try to apply the processes, so then you can kind of get a feel for what's occurring within the things that are mentioned, right? So again, we have this fair value gap, we have a midpoint of the wick. You could even say this is a previous day's low, and then you can also see the low point here. It's a swing low, a fractal low. So if that breaks, that ends up putting us in a position to start considering things may change. By the way, if you're getting value from this video and you get value from any of the other content that I provide, definitely hit that like button. I really appreciate it. It helps channel out and gets more people to see the video, because who knows, maybe I'm sure that there's some people out there that this could help. I know it's helped a lot of people so far. And I appreciate you guys for hopping on. As always, you guys are the whole reason I even do this, right? Because I could be doing what I was doing before, just being either in my private community or just doing what I got to do in private, right? I just like seeing people light up and start making progress. So that's what keeps me, pushing onto YouTube. So thank you guys for always supporting me as well. I greatly appreciate you. So I hope all this stuff makes sense. Again, if there's ever a question you have, just throw it in the chat and I'll get to it. We are approaching the 6:30 open. What do you think of the Dow taking the previous day's high? Well, let's go observe what that looks like. Okay, so let's start from the weekly, right? So first thing that hopefully pops off the chart at you, which we've mentioned for a while, is this SMT here at the highs. That led to a large jump lower in the Dow. You can see that the Dow is very indecisive right now. So the Dow is hard to read right now, especially with the fact that it's also broke correlation. And then, of course, we also add in the fact that the bonds and yields are not fully delivering cleanly just yet. So if you take this high to this low, you can also see something that I've mentioned multiple times as well from the last couple of calls. Well, basically all the calls since the start of me going live. We're kind of dancing near equilibrium. So when price is at a higher time frame equilibrium inside of a range like this, that's also a reason that things can be looked at as the conditions being consolidation driven, right? So not only is it, if it's bouncing between a higher time frame equilibrium, it'll consolidate or show its consolidation. But when we bounce through new week opening gaps, it can't break through multiples. That's another factor. And then obviously you layer that with the bonds and yields relationship. If those are also not really being too clear and they're consolidating, and then you add seasonality to it being the summer months, that kind of justifies why this isn't really doing much. And some assets will take off regardless, right? But when they aren't, and we have these things in alignment like they are, promoting possibilities for consolidation, then it's kind of hard to read what this is going to do potentially. But again, if we see the bonds rally like I'm anticipating eventually, and then the yields decline, we can trust the fact that eventually the Dow should fall in alignment and then go higher. And then obviously this retracement, we'll see if this potentially goes higher. This S&T here also, you validate that by looking at the intermarket relationships, right? You look at the bonds and yields, the DXY, try to figure out what the hell they're doing. And if this bearish S&T is not validated through that intermarket relationship process, then it's really difficult to trust it. And you keep your suspicions up. And you, again, don't overtrade, don't over leverage. You should never overtrade or over leverage anyways. You shouldn't aim for 100 points a day. Minimum could be 5 points. Anything above that should be looked at, especially if you're not consistent yet, should be looked at as the bare minimum. And if you can get that, that's how you can taste profitability and consistency fairly quickly, especially if you're able to catch some moves and identify bias. And when you identify things using this process we go through, I'm telling you, the whole point is clarity. Remember, every time you see this logo or you hear my voice, think clarity, because that's the main thing that I try to drive home, especially in my private community. And obviously that's the theme in the bio for this YouTube channel, where we take you from confusion to clarity, right? And it's purposely said, because that's what helped me. Profitability came after I had clarity, because if I don't have clarity in process, clarity in overall bias and validation and my model and my plans, it's almost impossible to become profitable, right? Because in business, you need to have clarity and be organized and have processes that are repeatable as well. So it's no different for trading also. But yeah, with the Dow, going back to your question, with the Dow taking out the previous day's high, that's reasonable too, because Mondays, the next liquidity pool that generally gets targeted is the previous day from the last week, which is Friday. So Friday's high and low, right? You notice that I outlined Friday's high and low here as well, right? I did that intentionally because when we're trading on Mondays, Friday's high and low is generally the liquidity that price wants to seek, whether it just takes one of them to seek the other side, or if it just slams through one and acts as a draw on liquidity. The most near term is going to be the previous day's high and low, which in this case from Sunday and Monday is Friday's high and low. We set equal lows here as well, right? And we again have equal highs. We're consolidating. So again, we want to see one-sided delivery as we walk forward. Because there's not really much news, we obviously want to wait till the 6:30 open, 6:30 Pacific Standard Time, because we want to see the manipulation. If there's no news, the manipulation comes when we break through the open of the New York session. But obviously 5:30 is when we like to start, because we got to get a feel for everything. Look at all the things we've discussed so far, right? It's, it takes longer for me to explain things than it does for you to actually start applying them. Do you think it's better 5 to 10 points a day, or look for 1 to 2 setup? Well, obviously that's potentially a preference, a very preference-driven personal perspective. 1 to 2 is obviously a wonderful thing. Sometimes you're not going to get 1 to 2, right? How are you going to respond to that? Sometimes you may not get 5 points, right? Sometimes it may show in the market, in the delivery, that it's just not going. So you take your trade off, and you only get maybe 3 or 4 points, right? So it just really depends on what you're comfortable with. 5 points will come before 1 to 2. So as you work your way up to a 1 to 2 setup, I mean, you could look at it as, that's your first step, is to try to get 5 points. And then once you're consistently able to do that, then continue to move forward, and then start maybe aiming for 10 points, right? And risk 5 to make 10. But you can easily, like ICT says, he said this multiple times, you can absolutely, if you have high frequencies, like if you could find multiple setups and navigate intraday price action in a way that can get you in front of multiple moves, or you can see multiple moves that play out, 1-to-1 can be profitable if you have velocity, right? And then obviously having a good risk to reward is a best practice. It's not a be-all end-all, obviously, right? You see a lot of traders looking for 3-to-1, 5-to-1, 1-to-2 even, and they still can't be profitable because they're demanding that when they could have just taken the 5 points consistently and been profitable, right? So you got to remember, like what is your goal here, right? What is your real goal? Are you looking to get good stats, right, in terms of pip haul or point haul, like I'm always hitting 1-to-2, or is your goal to be profitable? Because the fastest way to be profitable, not that it's guaranteed, obviously, and then obviously this ain't financial advice. I'm not a financial advisor, but it's sooner achieved if you're aiming for 5 points, or like the smallest target that makes sense, that covers commissions and can be effective. And 1-to-1 can easily get you there. So you obviously, as you work your way up, maybe you want to do 2-to-1 risk to reward, and you want to make that a norm in your trading. Okay, there's nothing wrong with that. It's your trading, it's your personal journey, and you got to keep that independent mindset. But as you work your way towards that, if that has been a difficulty to achieve currently, just aim for 5 points first and see how that goes, right? Don't beat yourself up for not hitting 500-point moves, or even 10-point moves if it's been difficult, right? Just aim for those small bread and butter setups. So then when you do get to that 2-to-1 potential and you have experience, you're not going to beat yourself up when money's flashing and you have a larger account when it offers 5 points. Because if you're so driven on 2-to-1 and you haven't been able to even get 1-to-1, it's going to be difficult, because when you take the losses, you're going to start thinking negatively. So just as you work your way to that 2-to-1 objective, just for now, try 5 points. For NASDAQ, try 10 or 20, whatever you'd feel comfortable with, right? And just try it. What do you have to lose to try that, right? What does anyone have to lose to accept the money that comes, even in a minimum capacity? As long as your bottom line grows, that's the key, right? You have nobody to impress, right? You have nobody's opinion that matters if it's negative or trying to dictate how you trade, right? Nobody's voice should matter unless it's constructive and helpful, and you're allowed to be independent thinking, right? Because nobody's going to take the trades for you, right? They're not going to be there to spend your money, and they're not going to be there when the times are difficult. So you got to protect your mind and look at what's going to help you get to that 1-to-2 setup, if that's what you do aim to achieve. And it's achievable, right? It's very, very much achievable, right? So yeah, just consider that, okay? But yeah, so again, we're reaching down to this weekly fair value gap here, right? It looks like we're reaching lower. Again, we're looking for the bonds and yields to try to promote us with a lower yield, higher bonds, which should lead to lower DXY, and then eventually higher indices. To paint out that lower price delivery, we have a beautiful setup here that could potentially, or a beautiful framework potentially aiming for this previous week's low. This whole idea here could look like a market maker sell model. It looks like a market maker sell model. We have the potential original consolidation. We have the run higher to a PD array that has rejected, which is this high here. This is a previous week's high. So we see how it purged that, and then now the early part of this week has already delivered fairly quickly. Because price in this price delivery here, if you measure this out, we could see that the 50% level has been attacked fairly quickly and hasn't given us really any retracement. It's kind of just blown through this range down to the 50%. Because this is the case, and if this does play out as a market maker sell model getting down below this low, it's probably only going to have one retracement versus the traditional two first stage distribution, second stage distribution. It may just have one little retracement and then aggressively try to seek the sell side if we are going to see price continue to drop in line with the yields. That's a key element when you're observing the market maker sell model or buy model. If you map it out and then it just quickly breaks through the 50% level, you want to make sure you're aware of the fact that it may not present you with two distribution phases. It may now just present one to then quickly get down below, because that's just showing that it's super heavy. So sometimes it does not deliver the traditional framework in terms of the phases, having one distribution and a two-stage distribution when it breaks through the midpoint of the market maker range that we outline, right? So it's just a little gem a lot of people don't realize, right? So again, we have Friday's high here, kind of left Friday's high. Let's see, the GBP left Friday's low, and also the euro left Friday's low as well. But again, there's SMT at these lows promoting potentially the currencies to go higher. That's again in line with the higher bonds and lower yields, which we observed to try to justify the DXY dropping lower as well, and then the indices going higher, right? So yeah, I hope that makes sense. I hope that the validation perspective and invalidation perspective for this particular, this particular narrative, I hope that the validation invalidation identification is reasonable to understand as well in terms of the 3 PD arrays. All right. So yeah, that's what we're looking for today. We're looking for this to possibly want to seek higher prices. As long as price stays inside this this little box here, which is a daily fair value gap, as long as it doesn't completely obliterate it, and then DXY also continues to show us that this market maker sell model is going to stay valid. As long as that stuff stays intact, as long as the yields go show that it's going to go lower, and there still remains a possibility for the bonds to go higher. As long as all that stuff stays intact, we know exactly what we are here looking for, and we just need to now see possible setups for the indices to go higher, and then obviously the DXY to continue to go lower, right? So yeah. So yeah, guys, I hope this stuff makes sense. The more that you hop on these calls, the more it's going to just click in terms of the process, okay? And then, most questions will be answered timely. It's obviously best to voice your questions so then I can see them and I know where you guys' struggle points are at. Otherwise, I hope that the process becomes clear, amplifying that keyword clarity in terms of process, how you get a feel for what price should or shouldn't do, why it should do it, what invalidates or validates a particular idea, how to navigate the higher time frame to lower time frame, so on and so forth. And then eventually you guys will be little freaking savages, right? And or just improve upon what you already have success in doing, right? So yeah, again, remember, Sunday and Monday is generally consolidation and manipulation. So if price is going to continue to go lower for the DXY, it'd be reasonable for them to retrace, possibly even hang out up here, trying to portray the fact that it may not go lower, and then maybe smash lower. Same with the yields, if they just hold for a couple more hours, or like up until the news event comes out. Because remember, if there's a move that occurs in the higher time frame, generally it's going to be caused by what happens in the economic calendar. They use that as a timing tool for institutional sponsorship and then that directly impacts moves that occur or don't occur on the higher time frame daily when we're analyzing higher time frame moves, and then when a higher time frame objective will be met. Right. So yeah, I hope that makes sense. I'm gonna keep mentioning it every call just to make sure. And also, me continuously repeating the same stuff is going to show you that, dude, this is a repeatable process. It's not random. It's not new things every single 5 minutes, right? Things become very repetitive, and I'm not using every single ICT concept. I'm just using the ones that I use in the structure that I've created for myself, and that structure and process I share with my students, so then they can, like yourselves, that can take pieces from it or, entirely try to emulate the same process, right? But we all have, different models to some capacity. We can all have the same model, but trade different elements or different areas when the model performs. And if you guys have been here for a while, you've seen also that there's multiple entries that occur. It's not just one entry using that one model. That one model, no matter which one it is, presents itself in a continuation capacity. And maybe I saw the first move, but then you waited to see it set up again, and then you took the continuation portion of it, and it's still the same model. That's why this will never change, because you can have the same things, do the same things, but see a different bias or find a different entry point using the same model in the same price leg versus somebody else, but still have all the same types of principles. See, so that's the beauty in trading and ICT concepts. We don't all have to be exactly the same, and we can do the same exact things, right? But then still find different opportunities, and both still be profitable. Maybe I'm bullish and you're bearish, or maybe, vice versa, and I take a buy going up into a bearish PD array, but you take the sell from that bearish PD array using the same model, right? And both of us are correct if we can be profitable, right? One may have a larger opportunity, but nonetheless, that doesn't matter. What matters is, can you get in there, make sense of the navigation and the overall narrative, whether you're going against it or with it, and whether you can come out profitable or not. That's the only thing that matters. And having clarity, right? Whichever side you're on, whether it's the retracement in a move or the continuation in a move. Do you have clarity to frame out that setup? And do you have a repeatable process? And then can you engage, have risk management, and then come out profitable consistently without trying to hit home runs every 5 minutes, right? Because that'll really dictate you as a trader, in all honesty. But yeah, so again, just to make sure everyone's aware, we definitely want to see this continue to go higher. We are clearly respecting this daily fair value gap midpoint, so let's observe and see what happens. If we were to break above this swing high here, maybe there's another one. We've taken sell stops here now. We've hit this fair value gap. All right, let's see what happens inside here. All right, it wouldn't be unreasonable for them to come and take off Friday's lows, because they've set equal lows here. It wouldn't be unreasonable. They've set equal highs here as well. It wouldn't be unreasonable for them to seek sell stops here, take it, and then give us a move. But we'll see kind of what happens. See, the beauty in having the higher time frame narrative understood and what justifies a particular narrative, and then your ability to trust that, the key element to that is when price is delivering on the lower time frames, you're still able to have conviction to a particular direction and know when it's going to stay valid or when you have to switch and be flexible in terms of what you're trying to see with the direction that occurs in the moment, right? So nothing will take us away from trusting the fact that this is going to continue going higher unless our invalidation levels are attacked. And we will never blow our account, because if we were to take a trade bullish but it turns bearish and we're wrong, that's one trade. Our rules are only 2 trades a day. Drop the risk by half if we do take a second trade, right? And if it doesn't make sense, we stop. We never overtrade, never over leverage. So that gives you peace of mind, because if you overtrade and you over leverage and break the rules, you're making this harder and you're increasing the time in which it's going to take you to be profitable. You're increasing the scar tissue that's going to make this more difficult than it has to be. You're over trading and over leveraging. Yeah, there may be some type of reward at the end of that if you get it right. But if you get it wrong and you spiral out of control, now what? Now, if you had a good past couple of months or couple of weeks, now you just erased all that process or all that progress. Now you got to go back and try to play catch up, right? When you can just take one or two trades, evaluate, take seriously what you're doing, and understand that there is a risk involved, and operate as a professional. Because again, Warren Buffett isn't out here betting the farm 50 times a day or even 10 times a day. He's getting very accurate observations of what he's trying to do, waits for those parameters to take place, gets in and acts accordingly, right? He doesn't aim for home runs, right? He aims for making a couple good decisions safely, right? In a sober-minded capacity, and then he prospers from it, right? He takes losses too. Everybody takes losses, But then at the same time, it doesn't matter if you take a loss because you're going to take losses. What matters is how you operate and how you navigate those losses. What's your process? Is it repeatable, right? Can you trust your assumptions, and do you have clarity, right? Can you manage risk, right? If you can answer all those in a positive manner, then and then go and apply that and make sense of the things that you're operating in on a daily basis, then you have so much ability, so much opportunity to do some amazing things. And yes, it's going to take time, especially if you don't have money. If you don't have a lot of money, this stuff takes time. You got to build up your account. But if you can't manage small amounts, how the hell are you going to manage a bigger amount, right? And just because we can get funding, that doesn't mean nothing, right? If you have the funded account, but you can't manage the money properly, and you overtrade and over leverage and do all the things going against what I've discussed here and what I discuss on many occasions, if you go against those things and you don't have the discipline to follow those and play this as a professional, that's why it's so difficult. That's why you're going to keep resetting. That's why you're going to keep buying new accounts. And a lot of people start to blame the market, blame this, blame that, and then they never improve, right? And then they get mad, right? And it's just like, it's all avoided if you just do things correctly the first time. And that doesn't mean always being profitable. That means just operating in a safe, controlled environment, giving yourself reasonable time, okay? And do not beat yourself up if you get it wrong, right? Observe why you got it wrong. And all these things that we discuss on these calls help you have different reasons to observe why you were wrong. Maybe the bonds and yields weren't confirming. Maybe you went against that, right? Maybe things were consolidating and things just didn't move and you didn't time it right. Maybe there was a news event that comes out that you weren't aware of because you didn't pay attention and follow the rules, right? Maybe you entered trying to get, like one of my friends was talking about earlier, maybe you were aiming for a 2-to-1, demanding the 2-to-1, but it offered you 5 points and you could have just taken it out because eventually the market proved you wrong, right? Those little small decisions didn't have a deciding impact on whether you hit profitability or not, right? It's a lot to manage mentally, right? And the best way to do it is to be prepared for all scenarios, right? And that has to do with having rules that stop you from being in particular scenarios and getting hurt. All right, so I do see something that could come into giving us a possible opportunity. All right, we have a swing high here. Okay. I'm going to make this big and we'll just refer back to things. So we do have, like I said, these equal lows down here. It wouldn't be unreasonable for them to want to smash lower. But again, our bias for the DXY is bearish and bearish for the bonds. Bearish for the yields, bullish for the bonds. That promotes this to be potentially bullish and eventually aim for the equal highs. We do run the risk of these equal lows. Remember my rules too from last week. When we have equal lows down below, it's kind of suspect, especially with the fact that DXY has been so bearish overnight. That runs the risk of it retracing higher, right? Pulling back, maybe coming back into this order block. And then that would send this lower to maybe try one more time to get down below the lows here. So this is a pretty risky opportunity if we do see a shift in market structure, which we most likely will, potentially. It's riskier to see price take this and then try to think about an opportunity to buy, because DXY runs the risk of retracing. Again, though, something, like I mentioned earlier, this may not have a super heavy retracement, because if this is a market maker sell model, they're going to quickly drop lower because they broke through the 50% of the range from this low to that high. So that's something to consider and observe. Right? Again, it's Monday. Sunday and Mondays are the lowest probability conditions. So, and also the bonds and yields, we see the bonds and yields are still inside that previous week's range. So it's range bound, range bound, range bound. Okay. So these are all considerations. So with that being said, will Christian take a trade right now if I see a shift in market structure bullish, given that the observations we just talked about? I will not. I will not take the trade. I will allow myself to miss this setup if it does take off, to then give me more insights as we walk forward into the rest of the week, versus looking at it as, if I miss the setup, I'm a failure. I don't know how to trade, blah, blah, blah. Right? Or I'll never catch a setup, or I'm always this and that. Right? You got to change that perspective, right? When we don't take a trade, look at it as preparation, right? You're letting the market speak to you and give you clarity. Because then if you miss this setup, obviously that's going to promote the fact, if it does go bullish, that's going to promote the fact that our analysis is pretty much correct in terms of price wanting to seek buy side delivery as the week progresses, right? And mind you, we have so many objectives to the upside, right? Just because that move happens would not mean that there would be no setups, right? Now, if we see price break through this and then DXY and the yields start to fall, right? If we see something present itself in that way, and then maybe break through the midpoint from this high to that low, right? Maybe start to look like it's going to use this as a potential inversion fair value gap. Or maybe if we get above this new week opening gap, right? Maybe it'll set up a continuation variation of the YouTube model inside the price leg that delivers like that. Maybe it'll do something like this, right? Maybe it'll break through like this, create a swing low, break through the swing low, shift in market structure, then possibly present us with the continuation rules here to maybe get in line with something like that, right? Maybe that occurs. Maybe it doesn't occur, right? But yeah, if we were looking to try to position in a move that already takes place, remember the continuation variations of the models, right? This could either, have a swing high here, shift in market structure, present a YouTube model continuation, or maybe if it does something like this, that would potentially be a continuation breaker, right? And then say the DXY is bearish and the bonds start to fall, and so on and so forth, right? That's how you would consider trying to reposition yourself or get in line with a reasonable narrative for continuation. Again, guys, if you get value from the video, definitely don't forget to like, comment, and subscribe. I appreciate you guys that have done that. And I appreciate all you guys that have hopped on recently too. Really grateful to have you guys here, so I hope you get value. So if we miss this original setup, if it does take off, that is how we would shift our thinking. And again, we have price breaking through the midpoint of this possible market maker sell model scenario that does promote the potential for the bonds to go lower, right? It does kind of justify that. And then again, if we go to the currencies, we could see how, again, we have that SMT. Price has hit a fair value gap that I looked for price to hit. And obviously, there's now been a response from that fair value gap. What is that fair value gap, you may ask? It's down there. It's a daily fair value gap below all these lows. I called that out last week. We called this move lower all the way from up here in this consolidation in my private community. I think here too. That's basically delivered. We called this as well to go lower, and everything's been in alignment with that. Right, so yeah, we're now beyond the open price. Looks like, again, If this is going to fall, if you go from low to high, we're below the 50%. It has not done really any reasonable distribution retracement characteristic. It's just been pretty one-sided all the way through the 50%. So we may not see some deep retracement. And if this presents itself, we may only get one decent retracement before it ends up attacking the lows here from previous week. Right? And that scenario's being considered because of the fact that price has completely smashed through the midpoint of the range from this low to that high. That creates this possibility of a market maker sell model framework inside the higher time frame bias being potentially bearish on the bonds. Bearish on the yields, bullish on the bonds. And then if we look at the DXY, we're inside this fair value gap. So yeah, we should see this fair value gap not really hold too much. And then we should see this order block here also not really be respected if we are going to go lower, right, and fall in line with the yields. Okay. So again, there's some things that I like to repeat, right, and specifically to the overall validation principles, the intra-micro relationships between the bonds and yields. I do that just because the simple fact of making sure you see in the moment how you can start to continuously gauge, continuously monitor whether things are in line or not, whether they're still trustworthy or not, right? So far, everything is fairly trustworthy. Now, if we get price aggressively smashing higher, right, and starts breaking through a ton of PD arrays, maybe gets above this daily order block level, which we're below right now, so that's kind of helpful in terms of us trusting that this is not going to retrace a lot. Also on top of the market maker sell model 50% smash. If it does break through that, then obviously we look at the yields and the bonds, see if those switch. But at least for the time being, it looks like everything is in alignment with our overall bearish yields, which the DXY follows, and the bullish bonds. We see bearishness looking like it wants to be promoted here in the DXY. Looks like it, ideally is going to use this as not much of a support level. It should be slid straight through. And then obviously we'd like to see, as a result, this potentially look to rally and start seeking buy-side liquidity as mentioned. Again, we do run the risk, just like last week when I said I don't like to buy equal lows, and then price ended up taking out the level I said I was hesitant of the move because of. It may do the same thing here, right? It may look to drop down, attack the sell side here, then eventually look to possibly end up rallying again as well. So yeah, we gotta just observe what happens here. Let's go to the 1 minute. There has been a run on stops here. All right, we'd have to see what DXY wants to do. We're in the opening range, right? So we can actually go look and see a regular trading hours perspective. And we see that we do have a regular trading hours gap. So if we go up here, here's the open there. Regular trading hours gap. You see how price ran into it a little bit? Came close to the 50% of it. So yeah, that's pretty interesting. So again, we have this sell side, the equal lows that could potentially be targeted. DXY is not really given too much helpful price delivery besides the bearishness. So there's intermarket relationships are pretty skewed right now in terms of looking to engage the indices. Super skewed. You see everything's cracked in correlation. Everything's cracked. It's going higher. Indices, the other ones are going lower. DXY is not really moving. Bonds are really not moving. DXY still, in my opinion, looks like it's going to potentially favor sell side because we're already below the midpoint of the order block. We have this market maker sell model potentially. So we just have to see what it's going to do as we march through this opening range gap. or opening range, right? So silver bullet comes at 7 because there's no news. It's best to wait like we are, and as we mentioned at the very beginning. So yeah. Sorry guys, I just seen your messages now. Couldn't join the Zoom. Doing some. Oh, no worries, Nico. It's okay. We go live all the time. It's okay. I want to ask whether it's better to use higher time frame, H4 or H1 structure. Mr. R, it's kind of dependent on preference. It's very, mind you, if you're looking for bias, higher time frame, depending on the style you trade and how you like to navigate time frames, which is very subjective. Depending on how you view things, and what you're comfortable with looking at, that's going to determine whether the 1 hour or the 4 hour is important to you for structure. Higher time frame structure is going to determine more of a long-term view. Lower time frame structure that you're seeing get taken out is going to be generally near-term, short-term in nature. So maybe that's an important piece of advice. But yeah, again, it just is very subjective. It depends on what you're trying to do in terms of what kind of trader you are. I like to use the 1 hour time frame to gauge a lot of things. I can determine bias on the higher time frame from the 1 hour chart, but that it just takes a lot of understanding about what that higher time frame looks like when you're looking at the 1 hour chart, because you can visually start to map out what a daily candle looks like based on what the 1 hour chart looks like, because there's 24 candles in a 1 day candle, right? So if you're able to just start practicing, looking at the lower time frame while understanding what the daily candle looks like, that's a pretty helpful drill to be doing. Like look at the 1 hour, look at the daily candle, and then go break that down on the 1 hour, or break that down on the 4 hour. But yeah, again, higher time frame structure is always going to be more long term in nature. Oh, nice. Yeah, I don't really trade euro. I don't really trade currencies in general. EuroCAD and EuroGBP, especially. I'm not really 100% sure. I don't want to divert my attention too much because we're looking at price here, and things look like they're about to pick up and support the ideas that I've been mentioning all morning. So it looks like the S&P, the NASDAQ, and the Dow now have SMT at the lows. So it looks like we may be in line with this becoming a breaker here to support our bullish bias, right? And DXY is now sliding. So again, if I'm going to consider taking an entry, my entry will be considered from this breaker. Given what we see here, I'm going to use the breaker model because that's what I see currently in price. If I saw a YouTube model, I'd use the YouTube model, right? If I saw some other model in play, obviously I would use, I'd use that model. But currently we see that this could end up being a breaker if we get above here. If it doesn't get above there, then obviously we don't even think about anything, right? We just continue to monitor until something is in alignment. But I see DXY looking like it wants to fall. Looks like things can reasonably be anticipated to go higher. I do see on the DXY that there is something suspect. We see the Dow still raging, so yeah, I'm pretty confident that we're going to see price eventually turn around and go higher for the indices. Again, the DXY here, I see equal highs. That's kind of suspect. Again, we're still inside this market maker sell model, so these equal highs, because the 50% of that range got taken, that may be a reason why this doesn't even retrace. Remember what I said, if we hit that 50% and there's no reasonable structure showing 2 stages of distribution will come into fruition because the 50%'s been taken aggressively, then that would negate our trust or thought process of this retracing into this, and we're below this daily order block midpoint. So again, there's a lot of factors, including what the indices are doing right now, that are giving us some sentiment to trust in terms of DXY going lower and the indices potentially going higher. Or at least that's how I'm viewing things, what I'm seeing in price. Right? So yeah, let's see if that's going to continue. Whoops, let me go to whoops. Let's see what happens here. We got this breaker, and then not only that, we have this inversion fair value gap. So if I'm going to start trusting buys, I want to see these levels get smashed and start seeing them act as support. Looks like it's what's going to happen. DXY is tanking aggressively. So again, if we break through this, not only is this a breaker, but if you go like to the 5-minute, it's also a bullish order block. So yeah, if we break above this, below the midpoint of this breaker, it should not come back down through that breaker, because this run higher here, this high here to this low, and then back above it, this whole range from high to low becomes a balanced price range, because buy side's offered, sell side's offered. So we shouldn't expect price to come down below that midpoint, and it should fall in line with our overall direction, which has been bullish and then obviously bearish DXY. And look at what price did. You see the midnight open? Price came right down to that. That's not random. That's entirely not random. Best buys come from below midnight open, and look what happened. It came right down below it, setting possibly the low of the day. So yeah, this breaker, in my opinion, is what I'm going to engage. Yeah, it looks like we're going to have a beautiful move. Hopefully we can get that retracement so that we can enter. So let's see what happens. Damn. It came right to my entry. It didn't even trigger me in. What a clown show. Damn it. It came right to it. It came right to it by like less than a point. God damn it. That's crazy. Look at this. Right to it. Didn't trigger me in. What a freaking clown show. Hate when that happens. Well. Oh, God. That was such a beautiful move. See, that is painful to anybody. We have been so on point this morning. As always, called exactly what I wanted to see, did exactly what I wanted. Wow. What an annoying situation. It happens. If this was the new me, or like the new trader in me when I first started, I would be chasing price like a freaking madman right now. I'd be so upset. I used to get so mad. I used to get so upset when this type of stuff happened, especially because I was trading Forex, and they play a ton of games trading Forex, so I don't trade it no more. But damn, now we have taken off. It did exactly what we said. Price just did not come down deep enough because it was just so fast. So remember what I said? Everything that I've said. The fact that there's not likely to be a retracement because of the 50% of the market maker sell model. The fact that, things should be quick and bullish in the indices, bearish in the DXY. I mean, I don't know how much more perfect of an analysis you can get than that, right? And it's just beautifully done every single thing that I've said it was going to do, which it typically does. I'm not perfect, but it is what it is. We get things right a lot more than we get it wrong, so I hope that gives you guys confidence and shows that the things that I'm telling you are all very important things, and shows that you don't need every single ICT concept to be able to understand how to be profitable, how you can achieve success. Because, I mean, dude, if it would have tagged me in, I would have been out already at like 50 points. Literally. Like it's already ran like a ton. It's already went just so insane. Oh, well, the S&P wouldn't have been 50 points. Oh yeah, the S&P, what is that, like 20 points ish? Whoops. Yeah, the S&P, how many points was that? Damn, it was just, that sucks, right? It was like 10 points, whatever. See, so when you see things like this, or if this type of situation happens to you guys, I mean, it just barely missed me, just barely. But when this type of stuff happens, the main focus you need to have is not on the fact that, I missed a setup, this is freaking annoying, pisses me off. Although that is true, and it is, it's going to be that way for everybody. When this type of stuff happens and you're beyond accurate, the thing you have to mainly focus on is the fact that the process led you to being able to even have the opportunity of having this perfect. I mean, how much? There was zero drawdown that would have been encountered if it would have tagged me in. Right? Zero. And I even said there was SMT at the lows. I said if we get above here, I'd like to see a return back. We should see the DXY fall and not have a deep retracement because of the 50% being smashed in this possible market maker sell model. That's in line with the possibility of the bonds going low, or the yields going lower, bonds going higher. Right? So all these pieces coupled together led us to this type of amazing result, right? So it's not like, I just think it's bullish or bearish. No. All these things that we've mentioned in order, from the higher time frame all the way down to gauging this potential breaker, which actually did not deliver, by the way. That's a failed breaker. Remember what I said also, if it did come back into it, this would act as a balanced price range. What did it do? Acted as a balanced price range. Didn't even come back into it at all because they didn't have to. Right? Even use the inversion fair value gap here. Right? So there's so many things that you have just witnessed just in today that if I could get you to realize what you just watched, and what you guys continuously watch, especially my private community, you would be astonished at just how close you are. Just how you'd be so astonished at how simplistic it could be versus how overcomplicated we make it seem as new traders. You'd be just astonished. I hope that it kind of gives you, clarity as far as, understanding why price went higher, what was able to allow us to trust that it was going to go higher. Even to the point where you don't see me pushing my luck, trying to chase price. Oh, I have to get in. I don't have to get in. I do this regularly, right? We do this literally on a weekly basis. And pretty much every single live stream except one, since I've started live streaming, there has been proven clarity and consistency. Right? There's been, mind you, I'm not a financial advisor. This ain't financial advice, and anything you win or lose is your responsibility. I don't tell you to get in or tell you when to get out or do any of that type of stuff. But there's always been something reasonable to get in line with that had a hypothetically, right, profitable result. Right? And it's all been repeatable. It's all the same process over and over and over. Nothing changes. You don't see me pulling a magic rabbit out of a hat, do a bunch of different things, right? It's very constant. And that's why the results that are witnessed here, both here and in my private community, are consistent. And it's aiming for sometimes the lowest possible target, and then sometimes it delivers much more than the lowest possible target. Going back to what I believe it was Joe, going back to what he said earlier, should he aim for 5 to 10 points or 1 to 2 setups? Well, you had both options here based on the framework we just mapped out from start to finish since we got on, right? You had both options. With all the things that we layered upon each other, this is a scenario where you could have considered, because of the vast amount of confluence, you could have obviously trusted or had more faith in the fact that this would be an opportunity that would get you to achieve that 2 to 1 or more. And in this case, you could see it's going to get you more. It would have got more. Right? So yeah, it's just a beautiful move. It's just, mind you, it does sting the fact that it didn't get me in. It does sting, and it's going to always sting, right? But we called this from start to finish. We have been bullish the whole morning. We did not sway and change because we saw it drop. Nothing moved us away from what we had conviction in, which was the bullishness and bearish DXY. Nothing swayed me from the fact that this was not going to retrace deeply, and we should reasonably anticipate one heavy move with a very minimal retracement. We justified why these equal highs would likely be left because of that simple tactic we discussed. And you can just see the fruits of actual understanding on full display. Right? So yeah. So now, let's see. It's gonna go to the. Oh damn! See, if I was paying attention, I would have been able to snag freaking NASDAQ. Definitely wasn't paying attention. Well, the one opportunity that was set didn't pull us in. The NASDAQ six-sistered the scenario, meaning that everything moved quickly and NASDAQ took a while to get back in alignment. You could consider the fact that, maybe you can enter here for an institutional order flow entry drill, right? And maybe that's going to deliver up above these equal highs. We are bullish. But you got to consider that's a higher risk move because now we're at a premium. Right? Now we got a new range. Sell side's taken. Buy side's taken. So now, right? Now we're at a premium given that range, that new range that's created because we took sell side and took buy side. So if we are going to try to look to position, we're going to try to think, okay, well, how can I get back in? Possibly if it offers something. What do I look for? Well, you look for a swing low to get taken. You look for a swing high to be formed and then see it punch through that. So I did consider the breaker for entry. Are you talking about right here for NASDAQ? Is that what you're talking about for NASDAQ right here? Because you could have. That's a possibility. Right, so you can consider this as a possibility. And it beautifully delivered. And yeah, it'll most likely, at least from what we see here, I like to see stop runs first also. So if we can get this to drop a little deeper into it, run out this little stop here, that'll make me a little bit more interested. But yeah, there is a breaker here. This is a breaker. You can see that that is a breaker. Right? We can pull this out like that. Are you talking about right here? Uh, 19,640. You must be trading CFDs because that is way off what I'm looking at. We're in the 19,900s. And I'm assuming that you're talking about this. I didn't consider this because I wasn't here. I was looking at the other chart. I did mention that if I did see this, that would have been the entry that I would have taken. I just didn't look at the chart. Sometimes that happens, right? Sometimes you'll miss a move, it won't tag you in. Sometimes it just, you won't be at the chart. But yeah, if I did see this, if I wasn't talking about what I was talking about, I would have entered that. This is a secondary move here. So there's a run on stops, shift in market structure. This order block would be the next possible entry. Again, not financial advice. Any wins or losses are your responsibility. But from my perspective, this hypothetical order block here after the run on stops into this breaker, second level breaker from the higher time frame, opposed to this one, that would be my next consideration. If we break above this high, possibly return back into it, stop would go likely a little bit lower here. So this whole range from high to low should act as a balanced price range. Invalidation would be basically the mid point of that potential range here. DXY, if it continues to fall, that's going to be beautiful. This whole range should act as a balanced price range. We should not see price come down into here. Right? If it is going to continue, we need to see DXY continue to go higher. And then what you also want to consider here is the NASDAQ is the slower of the three. So that's showing that there is some pressure on NASDAQ trying to go higher for whatever reason. So it is the slower one, so it may be a little bit more difficult. But as long as everything stays in alignment, we should be able to see, again, this be a potential opportunity right at this order block here. So we'll study that and see if that has any ability to continue to push price higher. But we'll see. There's been a whole lot of delivery that's came about in the other two indices. So we also have these equal highs here on the NASDAQ. So that, in my opinion, looks pretty reasonable as well. And then again, if you go to higher time frame, we could see the overall narrative. It's retraced to the fair value gap. And now we're delivering. So yeah. Let's start mapping out what this would potentially look like. Right? So yeah, we'll see what happens. So again, I said that this would be another hypothetical way to get back in. And what do you know? Candle came right down into it here and then took off quick. If you weren't fast enough, obviously you would have missed it. Or if you didn't trust it because you are just not there yet. That's all fine. No reason to be upset at yourself. No reason to think that you suck or will never get this under control. Right? No reason for any of that. Right? There's been 3 possible entries. There was one inside the S&P, which I was banking on, and it just didn't tag me in. Second one was here, which I didn't see, but it obviously was in line with the overall narrative we've painted. Then there was a possibility for this third, more high-risk entry here, which is at this order block to possibly catch it, continuing as long as DXY wants to continue to follow through. Whoops. See, now it's coming right back into it. See what the bonds and yields are doing. So now the yields are in alignment. So let's see what happens. So yeah, we do have the equal highs up here. That would be an ideal potential target as long as things stay in alignment, right? Looks like the yields want to go lower and the bonds now want to go higher. So let's just see if that is going to continue, because that's what we want. That's what we want to see. And if that happens, then things should eventually get up above those highs I pointed out. We may see price want to attack people that are in the trades right now, right? Take out the stops. So we'll see if that is going to be something that occurs or not. So yeah, this was the S&P, the first move, that was the lowest risk. Then this one was pretty low risk as well. And like I mentioned, this one is a higher risk, and you can see why it would be higher risk. You could just see the behavior already. So yeah, we'll see. It looks like they want to come and stop these people out. The ones that are right below this low. So we'll see what takes place. DXY has turned. Again, I don't reasonably want to see price for the DXY retrace too much. But we could see how this is in alignment with this first stage accumulation. So that's a first stage distribution. And it looks like it may want to do a second stage distribution here. Right? Generally, when it breaks through the 50% of a market maker buy or sell model range, it does not do anything significant retracement wise. It just floods through. So we'll see We'll see if maybe it gives this little baby retracement here. It should not come back above these highs. I definitely don't see that happening. I just don't see that happening. But we'll see. It is Monday. And Mondays are Mondays. We are still inside of a very indecisive price structure here. So the bonds are kind of indecisive. Yields are still being held. So yes, sometimes that leads to issues in terms of trending environments. Sometimes it does not allow for trending environments to take place in the indices or the DXY. So we'll see what happens. So yeah, do you guys have any questions about anything that we've discussed today? Was anything confusing? Is there anything that you'd like to mention or talk about as we watch to see if this high risk entry is going to deliver or not? Alright, so that would have been a losing high risk trade. And you also would have to contemplate with the fact that would you be allowing for a 30-point risk model? Many of you guys would say no. So in that case, would this have been a setup for you? No. So now how would you position if you didn't take a trade at all? Well, here's a run on stops. If the DXY then continues to fall, the next opportunity would be what happens after this swing high here breaks. Right? Maybe that would offer an opportunity to maybe gauge a run on stops, shift in market structure, then maybe a fair value gap. Right? And ideally, we'd like to see DXY continue to attack sell side as that occurs. So now we've also taken out stops here, right? So now we're back inside this breaker as well. So yeah, we'll observe what happens moving forward. How do you mark your breaker? Last down candle. That's sweep. You mark your breaker, it depends. It really depends. Like these are consecutive up candles. So, I mean, you could mark off this first candle, but if this is a larger time frame breaker, you want to get the larger time frame breaker, the candle. So this is the upper time frame breaker candle. Higher time frame has more validity than the lower time frame. So if there's consecutive up candles that creates a structure you think is a breaker, then you will want to use that higher time frame candle as your breaker, because you got to get an accurate range of what's going to be valid or not. You know what I mean? And that comes from you having the higher time frame perspective looked at. All right, so DXY, at least at the moment, is pulling back. This may become a silver bullet, right? It may present us because we're in the 7 o'clock time. We've now come into silver bullet time window. So we'll see what happens. I have no interest in anything just yet. You could say, let's use this breaker and enter. I personally, because of it being Monday, I'm a lot more cautious. The fact that the bonds and yields still have not fully proven exactly what they want to do, and they're being obviously held on purpose. I am more conservative. How would I be more conservative using the breaker? I need to see this shift in market structure present me with a continuation variation after proves that this breaker is going to deliver. So I'm choosing to operate in a more conservative capacity, because also we missed a couple of moves that I initially wanted to enter, but it refused to give me. That being the breaker on the S&P. And then I missed this one because we were talking about something. And then this was high risk, and I just would rather not. Remember, I'm trying to be conservative when these types of days are like this. And obviously, rightly so, that was the right choice. So yeah, let's observe what happens inside this fair value gap. Let's see if it can get above that, right? So then it would be there'd be one swing high, two swing highs, an order block, this bearish order block as well, these consecutive up candles. This is technically also, people would be looking at this as a breaker, but you got to remember, what is our higher time frame bias, right? Because if you didn't understand the higher time frame bias, if you don't know what the hell is happening, then you'll see two breakers here and be like, which one do I trust? I personally trust this bullish higher time frame breaker over this 1 minute small, breaker, which is also probably an order block as well. Yeah, it's also an order block. But that's on the 1 minute. I trust the fact that this bullish breaker is going to likely hold. As long as we see DXY stay in line with what we've discussed, how it should not have a deep retracement, how we should continue to deliver, how the yields and bonds should end up falling in line with bearish yields, bullish bonds. Again, it's Monday. We do run the risk. We run a risk of price wanting to seek sell stops here, seek buy stops here, then going. We do run the risk of that, right? And it's since we're in a moment where it's consolidating, you can't be certain it's not going to or will do that. You can't be fully certain, right? So that's why you play it safe. So now we have deeper retracement into the order of the breaker here. So let's see what happens if we get above this high. At or below the midnight open generally presents you with the best buys. So technically we are still in a pretty decent area if we're going to still see bullishness, as long as DXY gives us reason to go lower. We should be in business. Let's see what happens. Let's look at all three. So yeah, we got this pretty much on the 8-minute time frame. Looks like it's just a beautiful retracement. Looks like things should be able to give us that delivery to the buy side. Let's get above that. There's that fair value gap. So let's just continue to monitor what it's going to do here. is that fair value gap? Let's continue to march around and see. Is that fair value gap? Let's see what happens with that. And there's an order block here too, so it looks like plus the higher time frame, all the things we've discussed, I'm still behind the fact that we're going to go higher. I don't think we're going to drop. I'm just trying to gauge. See, so now when we get above this swing high, we've already had a run on stops. Let's look at these lows here. Is our SMT? There's SMT at those lows. Right? So this has the higher low. So we just need DXY to give us bearish price delivery. And then we have a decent amount of things that we can trust in terms of continuing to try to seek buys inside the higher time frame breaker, inside the higher time frame analysis that has multiple confluences showcasing the fact that we should be bullish in the bearish DXY. But yeah. So we'll see what happens. Patient, don't force anything. You gotta wait until things occur, right? I got one piece of advice. If you guys could take any advice, right, about like a setup for your trade station, you need to get a good chair, right? Because of my freaking back, the last couple of weeks before I got this new chair, man, horrible decision to keep the chair that I had. So get a good chair, otherwise you will regret it. Yeah, so let's see what happens here. See, when you know what you're doing, when you know what you're looking for, this is what you do with trading. You sit there and you wait like a sniper on a building. We see what price is doing. It's inside of a possible area where we could logically see things potentially go higher. Right? Higher time frame has some ideas promoting that idea could take place. Right, and it did offer opportunities to go higher, but now there's nothing for you to participate in. There's nothing that I would like to see right now align with what my assumption is, and I'm not going to change and flicker back and forth and lose my mind like most people, because things just don't change like that. Right? There's a lot of confirmation providing trust in potential bearish DXY, and then continued bullish indices. And until that changes, right, until things start to fully promote that sentiment has changed, you don't try to pick a top, you don't try to pick a bottom, none of that. My interest to buy, though, given what we see here, has now left the building, right? So now it's unfortunate that we missed a couple of setups, right? One didn't trigger in, another one we weren't on the chart to see it, or at least I wasn't. And then that high risk entry, basically getting disrespected, provided the fact that we needed to wait to see things kick back in line, and that never came to fruition. So all of that situational patience and us waiting, for one, stopped any losing trades. Unfortunately, the missed setup after that large move, that stung a little bit because we were right there, right? But it happens, right? It happens. But yeah, other than that, right, we also see how we're now kicking into a seek and destroy profile. Taking out buy side, now we're looking to take out sell side again, right? Things are completely skewed, doing whatever the hell they want to do. Still consolidating with the yields, still consolidating with the bonds. Nothing has delivered, right? At least towards directions that we'd like to see it move to confirm or negate potential ideas in the DXY. And again, we want to still consider the fact that we should not, if we're going to stay bearish for DXY, we should not see a strong, heavy retracement because we've already broke through the 50% of that range quickly. So this high should stay intact. So yeah, we'll see what happens. Yeah, it looks pretty juicy up here. So yeah, if we do start showing more signs that we are going to continue going higher, eventually, if it does kick back in, which right now there's nothing at this point. But if it was, that was going to be the target. With those equal highs. So yeah, sit and wait. It still could get attacked. We'll see. So yeah, see what happens. Looks like the S&P. Let's see. Do we have any? We still got the high up here. We're hitting this daily order block. Also this fair value gap here. It's kind of interesting. So yeah, we'll see what happens. So remember what I said, since that breaker was formed, we didn't want to see anything get traded through. We wanted to see it act as a balanced price range, which should have led us to see this as a strong support if we are going to be heavily bullish. That has not come to fruition. So clearly, things are not fully in alignment with what we're anticipating right now. It just turned on everything after this retracement occurred. So yeah, so all the rules and navigation in terms of what we want to see provided opportunities for the buys early on, which couldn't be participated in for reasons we've discussed. Then the high risk entry that if it was going to be heavily bullish today should have been able to push price and aim for the highs up there. Whoops. That did not occur, so that's a red flag. Price came down into this. We wanted to see an impulse breaking above the high here to kick us back in line, so then we could possibly consider another potential entry. But that never even came to fruition either, right? So all throughout here, given the fact that the overall bias is what it is, that being bullish indices, bearish DXY, I was not interested in trying to adjust and seek sell side because my bullish sentiment was being trusted all the way up until we got down into here. From the 3 PD array rule, from the just overall delivery inside this breaker, right? I don't just disregard. You don't just disregard your overall narrative unless there's a full reason to do so, and this, for the time being, was a full reason to do so. To not trust this potential entry, because for one, it didn't even follow the rules, and two, right, we just ended up sliding through. So yeah, you can see how also if you're sitting here trying to take an entry here or trying to take an entry in the S&P but you missed it, you can see how if you chased price, look at how you would have been abused, right? It would have literally abused you. And now you can view that and see that scenario. If you're trying to push the buys, following the higher time frame order flow, you can now see that decision to not engage is entirely beneficial. It's extremely beneficial because of the rules and how price manipulates. And you could see it's on full display here. Right? Shit, whoops. See, so now we got a shift in market structure. Let's see what happens. Other indices. I mean, I still like the equal highs on the NASDAQ. So again, we could reach up into there. Could happen. DXY still in line with the overall narrative, with not giving us a super heavy bullish retracement. So things are still in line. Looking at this condition, it's pretty high risk for us to even engage anything, just because we've been back and forth. It came all the way down, stopped these people out. We have SMT at the lows as well, like we talked about earlier. We have clear equal highs above, but we got to see DXY kick back in line. All right, just this price delivery, it's so ugly. It's just higher risk to even consider. So yeah, we'll see what happens. Got a fair value gap here. Fair value gap, order block, swing low. So if you study this, if DXY drops, let's see if this fair value gap, this order block, and this swing low hold any significance. I personally am not willing to take a trade right now. We already had opportunities, kind of missed them. Price has not been too clean in its delivery, so it's best, at least for my engagement rules, to just relax, let price speak, and see what it wants to do. That doesn't mean we can't observe hypotheticals, right? So it looks like this may deliver here. Oops. So let's see what happens. Keeping in mind all the things we've discussed throughout the day, let's see if this would be a time where it wants to deliver through. Go look at so we can see how the bonds and yields are not cooperating very much, and we can kind of see how that's translating into the delivery in the NASDAQ, how it's making it a bit sloppy. So see. So yeah, if you would have taken that setup, how would you have felt? Right? How would you have felt? Would have been like, what the hell is happening? Right? And why is it not going? Right? Again, we're starting to see visually the impact that the bonds and yields have when they don't move. You can have an assumption, but obviously something else is in the cards, and they're being held. It's just being held. Scalpers market, heavy scalpers market. So yeah. So yeah, we'll see. We're going to see as the week passes. We're going to see if this market maker buy model wants to fall in line. Again, ideally, because of what the bonds and yields are doing, I would prefer to see the DXY favor sell side because of the intramarket relationships between the bonds and yields. But we'll see if that comes to fruition. Today we banked on this being a market maker sell model. Then we banked on the fact that that would lead us to this rally, which the whole narrative did play out, at least for that time being, a little bit into the opening range. And the DXY gave us this reversal. Bonds and yields completely stalled out. And then now we can see how that's translated into the NASDAQ being in a seek and destroy low probability condition. So yeah. Which market is the index? What are you talking about, the bonds and yields? See, and then we go to the other three indices, and you could just see, like, okay, there's nothing to trust. There's zero reasons for you to trust in what the market is presenting you right now. There's no reason at all. Literally. Because everything is out of alignment. Sunday, Monday manipulation and consolidation. Not only that, cracking correlation between the three indices. Not only that, we have bonds and yields consolidating. So that gives you insight as far as why it's seeming like things are just, they're not following through with some of the things we're trying to see happen. Again, early on, right? The ideas played out beautifully. There was two opportunities that played out flawlessly, beautifully, in alignment with everything. And then, of course, as we press forward, things stopped, right? They stopped being in alignment with the overall narrative that we've painted throughout the morning, right? And so you have to be able to be aware of that, because if you're not aware of that, you're going to get steamrolled. And then you're going to be like, oh, why me? So yeah, today is obviously not a day to push, right? And maybe there's some traders that thought, oh yeah, well, I'm going to sell. I'm going to get in line with the sell. Okay. Well, what is there in price that will allow you to trust the sells? Right? That has to be the answer. Maybe there's an answer from someone that did take sells, and that's fine. Right? But as far as what I was looking for, I was not aiming at sells for many different factors. Doesn't mean that if someone took a sell and they won, doesn't mean that they're wrong, right? Doesn't mean anything like that, right? But that just means, so when you go into trading, you have to have something that you're committed to. Like, you go in, figure out a narrative, commit to it until proven otherwise, right? At least for the time being, the overall buys have been proven otherwise. So now, in that scenario, you have to make a decision. Are you going to be flexible and try to figure out how to get involved, right, with the other side? If you took a loss, are you going to try to push your way into making it back and trying to force yourself to be right at some point? Because that's a trap, right? That's how it gets you, right? Can easily fall off the wagon if you get something wrong and then try to force being right. My overall bias does not change for the whole week, right? Everything we've discussed is still intact. Everything is still intact. Okay, just looks like we are now retracing, right? We go from this swing low to that high. Price is retracing, maybe seeking the sell side here, these equal lows, which is also another daily fair value gap, right? Maybe it wants to go down there, right? But I'm also trying to monitor whether this fair value gap is going to hold, right? If it does hold and price starts running up higher, I mean, given the fact that the bonds and yields look like the bonds want to go higher and the yields want to go lower, right? It may take a little bit of time for that to occur, right? Maybe it wants to run up here, right? Maybe it wants to run up there and take that out. Maybe that translates into this moving higher, and then maybe that sends the indices deeper into this fair value gap. Maybe that is the scenario that takes place, right? But overall, higher time frame wise, given the structure we see here, right, it's not going to turn into, oh, this is an overall bearish market right now. It's just not there yet, and that may transpire at some point. But like ICT says, we do not pick tops and we do not pick bottoms. We must let the market fully tell us, based on the price action and the different validation points and processes, that we are now changing sentiment. We are in the third quarter, right? Price has been bullish for, throughout a couple quarters. So because we just came into this new quarter, maybe it does end up changing sentiment, right? That's something we got to consider, obviously. But again, we need proof, we need evidence. And there was S&T here. So this retracement, it's not super surprising, right? It could happen. It's logical to happen. Whether it ends up being a longer term thing, I mean, we're going to have to wait and find out. But we could see where price is reaching for right now with clarity. We were inside this fair value gap. Now that we've broken outside of the fair value gap, now we don't have the assumption that price is going to turn and go bullish here, right? Because it had the opportunity to do so, but it didn't do so. So now, what's the next level of liquidity? The next PD array? We have the midpoint of this wick, right? We also have the lows, which are coupled by a fair value gap. So clearly that's what it's reaching for. So now what happens when we get down into there, that could be significant. Whether it hits it and then aggressively starts marching towards the buy side again, or whether it has a failure to try to get outside of it and lags along and then starts dropping even deeper. This shouldn't fill entirely, right? If it does, then we're most likely changing, probably eventually going to seek these equal lows. But along the way, if that does end up being the case, we have previous day's lows all throughout here. We have a fair value gap, right? So again, we just need evidence that it's going to continue to do so and go lower. We did come off of the heels of an S&T at the highs. There is a possibility for this fair value gap to hold and push us higher. I want to confirm that personally for myself with bonds and yields promoting, bullish yields, bearish bonds. If that is going to be the case, if we're going to see bullish DXY and bearish indices, I need to see that take place because this is in consolidation, because this is pretty much the bloodline of the marketplace. It's hard and you got to be skeptical. It's hard to trust and you have to be skeptical when it comes to changing your overall bias until something is more clear. From the past couple of weeks, we've been clearly bearish in the yields and clearly bullish in the bonds. But for the last 2 weeks, right, price has been a little bit indecisive, right? So these are the times, in these indecisive times, where people blow up, right? Where people give away things that they've worked hard for months, sometimes years, right? So don't let that be you, because you have to get a trade. You have to be right. You don't have to be right, and you don't need a trade right now, right? It's in conditions that are more mixed, right? Everything's doing whatever the hell it wants to do, from the indices to the bonds and yields, right? They're consolidating on top of everything else. A large reason price in the indices and DXY get trapped in consolidation or don't follow correlation or clean price delivery is when the bonds and yields can't move. Because remember, these dictate so much, right? Bonds and yields, the interest rate markets, they dictate so much. And they're heavily a factor when it comes to validation and invalidation. All right? So just some things to consider. So yeah, the S&P looks pretty ripe to use this as a launch pad to go higher, but we'll see. We'll see. And of course we do have these lows down here as well. So now we took out Friday's high. We set those equal highs there. We also set equal lows here. Looks like it rallied up here. Now it looks like it has the possibility to drop and attack these lows. This is pure seek and destroy profile. Also, you look at the bonds and yields in consolidation. That's another way that you can start to validate whether we're in that condition also or not, right? In terms of seek and destroy, right? If you're familiar with that profile. So yeah, we'll see what happens. We got this order block here. It's like a 5-minute order block. 6-minute order block right there. So if you go from low to high, it's at equilibrium in this new range that was framed after taking sell stops, taking buy stops. So the range of opportunity, if it's going to be bullish or bearish, it's going to be right here. And this is equilibrium at a discount. If it is going to rally, it should rally from here, 750 macro. It should give us some type of, possible entry. We'll see. Again, because of the conditions, I am not interested in pushing anything. I'd rather wait for tomorrow, where we can have. Oh, that's another thing. There was a lack of news today as well. All right. So, lots of reasons to be cautious. As a result, no trade was taken. We tried to take one. It didn't let us in, right? It just didn't engage the entry, of course. And then it took off. And then ever since then, it's went opposed to the original analysis. Most likely just trying to suck people into the wrong perspective. Right? Again, until we're proven otherwise, we stick to the overall idea. See, this looks pretty beautiful here. Run on stops, shift in market structure, fair value gap, discount, fair value gap. Looks like it's possibly going to be a good idea here. See what happens. Probably gonna call it a day after 8:15. We'll sit and watch this delivery through this macro, see if it does anything useful. The 750 macro. See what happens. Let's see what's happening. So we got a shift here. Shift in market structure. All right, run on stops. Again, we still got those equal highs. All right, we'll see. We'll see what happens. Again, I'm not interested in taking a trade. I've already made that decision. Even if price runs away, we're now just in observation mode. At least I am. Whether you participate is on you. Yeah, we may finally get price to push in our intended direction after it has sucked in so many people to the sell side. Bonds and yields are still not really doing much for us to trust. So that's that. So yeah, what you could do also, you can go back into some of the opportunities that were mentioned, right? And you can go check the times, right? Check the macro times and see which ideas delivered in the specific times. So this one, that was a 650 macro. Okay. And then similarly, in that same vein, I guess you could say, the S&P idea, that also delivered at 750 macro. I mean, a 650 macro. Right? And then all throughout, right? Now we hit the 7 o'clock time. That was a silver bullet time window. Right? That kind of offered sell side delivery, kind of going against the overall direction we wanted to participate in. I mean, it's not surprising, honestly, that if they are going to be bullish, they faked people out, then they dug lower to pull in more sell side liquidity, right? And then if they eventually end the week bullish, I mean, that just makes sense in terms of power 3. I didn't think, because we were kind of bouncing around inside the fair value gap, I kind of wanted to see if we could believe or see the fact that price was going to stay inside that, and then see DXY continue to press lower. Also because of the DXY, how it was creating that market maker sell model, right? And then how it broke through that 50%. So I didn't want to anticipate any type of deep retracement. I still don't believe this high should be taken. And I still think that we are going to see things go down to here. But things got a little messy after a little while, right? So now we're in the 650 macro, or 750 macro. So we'll see what happens. But yeah. So yeah, and most times a big rule that I like to engage with is, if you don't get triggered in, when you don't get triggered in, what happens right away? Like today, right? How it came within 1 point of triggering me in, right? How does that make you feel? I mean, I'm human, right? It was definitely like, shit, right? Like, damn, why didn't it punch me in? And then it took off aggressively. We all feel that way, right? We're all human, right? What does that mean? In that moment, you are emotionally charged. Is that like a adequate mindset to have when you're going in there to engage, being supercharged? Like, why didn't it just tag me in? Like, now you're getting a little frustrated, right? Like, is that an adequate way to be thinking? Is that a safe way for you to put on risk? Save time, right? I would say it's not, right? So because that's the case, it's best to just calm yourself down. Wait a minute. And just don't force yourself to take a trade in that moment. Just wait. Right? And then we were dissecting some things, and then turned out we missed a setup also in that same time period on the NASDAQ. That's okay. Should I go get pissed off and chase after that too? Because then what? If I would have done any of that, look what price did. It completely turned around. Right? So from hindsight, you can see that the restraint that we showed today was very helpful in terms of preserving capital. So because that's the case, today ends as a winning day. Of course, it doesn't win monetarily, but technically it is winning monetarily because money didn't leave the account. Right? So you start seeing these different ways that you have to start thinking and adjusting your mindset. And just think about it. Nobody thinks this way. Or, well, I shouldn't say that. There's a lot of ICT traders that understand this stuff. Most people don't think this way. Most people don't give themselves enough time to get to this way of thinking, because you become, it's maturity within your, and trust in your model that leads you to even have the ability to think this way. You know, so yeah. We're just gonna sit and observe, you know, what takes place here. Let's see. So yeah, it looks like everything is, for the most part, kind of slowed its whole situation. It doesn't look like the 750 macro is going to deliver anything to the upside. It looks like DXY may be wanting to seek these highs I didn't want to see attacked, but we'll see. it just looks like it's beautifully layered liquidity to the upside. That's in line with the overall bullish potential idea. Right, but then if we go down to here, we also can see the equal lows here within the fair value gap. So it's just multiple potential scenarios. So, and then of course the bonds and yields ain't really doing much to assist. Right, then you add on the seek and destroy profile, and it's like, okay, pure observation mode until at least tomorrow, because then we'll have some news and the thing should be able to give us a little bit more clean price delivery. So yeah, we'll see if that takes place, but if not, right, probably just close the call at 8:15. Right, so in like 5 minutes, we'll give it 5 more minutes to see what happens. So these highs still haven't been taken. I mean, yeah, we have this retracement here. We've pierced out these lows, which is pretty interesting. Did leave pretty much relative equal lows here. Still in line with the fact that we could drop lower, right? Again, all this time we have spent on the lower time frames, I bet most people got themselves completely confused, or at least a lot of people are probably got themselves completely confused. You can't lose focus on what we're looking at on the higher time frame. You just cannot. Okay, so we have this retracement into this daily fair value gap. Again, I wanted to see, based on the bonds and yields, if we could see the yields go lower, bonds go higher. I don't want to see this hold bullish. I want to see this break through and potentially act as support. Act as resistance to then possibly get us to fall if the bonds and yields are going to promote sell side DXY. But again, if it does hold here, then obviously for the next couple weeks, we could potentially see the market maker buy model get completed, and that gives us a higher time frame bias to trust for probably the next couple weeks. All right, but that is if this holds, pushes price up. Overall higher time frame narrative for like more long-term perspective, for like maybe a month or so, for the quarter, I guess, it could potentially lead us up into the buy side. Right, so of course we'll see. We shall see. If we go from this low and start punching into this order block here, and it does not eventually show that this wants to be violated, then for the drawn liquidity for the week, we have Friday's high, and then we have the midpoint of this order block right above that. So then more near term, that could be a draw. Then we have this daily high, that could be a draw too, right? So, and then that would be on the way to getting above these equal highs. Above these equal highs too, if I didn't mention this before in the last couple calls, there's a weekly and monthly fair value gap. So if there is reason for us to go higher, then it may be wanting to reach for that as well. Of course, to confirm that, we want this to go higher too, and then this would have to go lower. That would then send us into a longer term bearish trend for the indices. So we'll see. We'll see if that's what comes to fruition. But yeah, guys, I hope you got value today. I do have a private community. If you guys are interested in that, definitely check that out. Link in the description. I appreciate you guys who consistently hop on. I hope you guys get value. If you guys have any questions or anything, definitely let me know. We will be going live probably on Wednesday because we are live today. We'll probably go live Wednesday, and then we'll probably go live Friday as well. So I hope to see you guys there. And again, if you have any questions, let me know in either DMs on Instagram or in the comments. But other than that, I hope you got value, and I will see y'all Wednesday, bright and early. Take care.